Welcome to your Thursday edition of VPTrade Daily Financial News. We're here to keep you informed on all things finance. Subscribe now so you don't miss any crucial updates. And in stock market news, U.S. stocks took a nosedive yesterday after the Federal Reserve announced a 25 basis point rate cut, bringing rates to the 4.25% to 4.50% range. Despite hopes for more aggressive easing, the Fed signaled a cautious approach for 2025, sparking a sell-off. The Dow plunged over 1,100 points, marking its longest losing streak since 1974. Meanwhile, the S&P 500 and Nasdaq also saw their sharpest single-day declines in months. Real estate and consumer discretionary sectors led the slide, falling 4% and 4.7%, respectively. And in Forex news, the dollar surged to a two-year high as the Fed's hawkish stance dampened expectations for rate cuts next year. Meanwhile, the yen dropped to a one-month low of 155.24 against the dollar following the Bank of Japan's decision to hold rates steady. Analysts predict prolonged pressure on the yen due to the widening US-Japan interest rate differential. The Australian and New Zealand dollars also hit multi-year lows as markets adjusted to slower rate cut projections. And in cryptocurrency news, Bitcoin briefly dipped below $100,000 after Fed Chair Jerome Powell confirmed the central bank has no interest in stockpiling crypto assets. Stocks tied to cryptocurrency, including MicroStrategy and Riot Platforms, saw double-digit declines. The market remains volatile as regulatory uncertainty continues to weigh on investor sentiment. And finally, in commodities, gold prices rebounded slightly to $2,607 per ounce after touching a one-month low. Analysts attribute this to short covering ahead of key U.S. economic data. However, rising U.S. Treasury yields could put downward pressure on the precious metal. Meanwhile, oil prices fell 0.6% in Asian trading as concerns over slower economic growth outweighed a recent decline in U.S. crude stocks. Brent crude settled at $72.92 a barrel, with analysts predicting an oversupplied market heading into 2025. Thanks for watching. If you found this valuable, give us a like, subscribe below. We'll see you tomorrow for our final update of the week. Stay sharp.